What's up, guys? Prodigy here, bringing you guys a quick video on support and resistance. And this video is aimed towards my beginners, more for people that actually have not pulled out a chart and want to start charting themselves. So, if you want to start charting yourselves and learning how you guys can get active in the charting community and start getting experience, this is a perfect video to get started on. So, in this video, I'm going to teach you guys three things. I'm going to teach you guys how to find your own support and resistance levels. We're going to talk about what that even means, and we're going to talk about how you can trade them and trade the break on them. And I'm going to also tell you guys what that means throughout this video too. So if you haven't been to any of my lectures, the way I like to teach is I like to teach you guys and teach everybody in all type of education or all type of learning processes, meaning, sorry, I had a little brain fart. But I try to teach people that all learn different. So if you're a visual learner, I'm going to have examples for you. We're going to pull up live charts and we're going to find some raw. We're going to look at a live chart that we haven't even charted yet and just straight up chart some levels real quick. And if you're somebody that likes to take notes, I also have a quick PowerPoint with just 4 key points that I want everybody to keep in mind when looking for specific levels. And so let's get right into it, guys. Support and resistance. What is that? And why is it important? And how can you start looking for them yourself? So support and resistance is really common and basic for all traders. And there's really no right or wrong support and resistance level. There is just stronger and weaker support and resistance level. That's all it really is. There is just stronger and there's weaker support and resistance levels. And what does that mean? So us traders, people that trade every day in the market, or people that just chart and do some simple technical analysis, meaning that we pull up the chart, we look at our charts, and we find some levels that we believe the stock could potentially reverse or break through and continue up to make some new highs or gain some value on the stock. So as stock traders, we can make money both ways. We can make money whether the stock goes down in value or goes up in value, because we can make pretty much quote unquote bets to the downside and to the upside. So when I pull up my chart, the first thing that you should always have is support and resistance levels charted out and find out where the key levels are at. So in this scenario, I have 386.58 charted off as a resistance level. And why do I have it charted off as a resistance level? And what is it? So this is the S&P 500 SPY for short. The ETF holds 500 companies. And anyways, this is a stock that I trade pretty much every day. So I noticed that every time the S&P 500 hits 386.58, it likes to do a lot of either rejection, meaning that it bounces away from, or there's times where it likes to break above it and continue on to go above. And so you can see right here on this specific wick, this candle wick right here, sorry, that's a big ass circle. But you can see right here at this level, it hits that level and it rejects. So let's say a couple days later, again, we're here one more time. And look at this. We have a little bit of a rejection and a little bit of actual consolidation, creating some type of bullish pattern, meaning that there's an indication for it to continue on up before the breakout. And what do I mean by breakout is before it even breaks out or goes above that level. That's a breakout. Breakout is when it breaks out. It goes above and it breaks. So you can see that before we even get that breakout, there's a lot of movement, a lot of action going on. All it is just buyers and sellers fighting each other. Not literally, but there's a constant battle of buyers and sellers. People constantly buying and selling the stock. So buyers need a lot of buying to happen in order to take us above this level and go above new highs. And we did, but it happened after hours. So after hours, we got that nice new level high and we got above 386.58. But as you can see, pre-market and after hours, man, we just tanked. So anyways, a couple days later, here we are again at 386.58, guys. And this time we got rejected. We didn't go above it. So that's what I like to see. That is a good resistance level in my opinion, as well as look at this. I'm going to teach you guys how to trade the breakouts of resistance levels. So we came to this level and we just straight up rocketed right through it, broke through it like it was butter. So I'm gonna show you guys how to trade that and what does that even mean and why does it happen and how you guys can take advantage of that. So whether you're buying shares or buying options, if you were to trade this, you would make some good profits on this. So all I'm doing as an option trader is saying, hey, I'm signing an option contract that says, hey, I believe the S&P 500 is going to go to 388 by the end of the day. Or I can choose 392 or I can choose 394. It does not matter. I had the option to choose whatever I feel like to choose. And in this scenario, I would choose 388 by the end of the day, or you can choose by tomorrow that you believe it will happen. You would be banking if you chose a contract right away. So anyways, let's go live into the market and find some support and resistance levels and show you guys how you guys can do this your guys' self. So I'm going to open up the S&P 500s and I'm going to clear some of these because I was actually kind of just doing so many videos and retakes that, oh my, I was already kind of doing them myself. So let's get right into it. How can you find some support and resistance levels yourself? So what I would do is I would go on higher time frames, because the higher the time frame, the stronger these levels are. The lower the time frame, they're not so strong. If you're looking at 1 minute time frames, meaning that you click on this time interval, this time frame option tab, and you're choosing what time frame you want to see these candlesticks represent. So in this case, I'm looking at the daily, meaning that each candle represents 1 day of buyers and sellers action, price action. So each candle is a new day. You can see that this is January 23rd, this is January 24th, this is January 25th, and so on and so forth. I'm going to go down to the 4 hours, meaning that each candle now represents only 4 hours of trading action, meaning that there's 4 hours of buyers and sellers constantly buying and selling. And then after the 4 hours closes, a new candle opens. And then after 4 hours later, that one closes, and so on and so forth. So now that I'm on the 4 hour time frame, like I said, start on higher time frames. You want to look for levels that you see the stock have reactions to. And what do I mean by that is, every time we hit specific levels, the stock likes to have a reaction on, or it gets rejected, or it just completely stops and has a lot of consolidation on. So if you see, I'm going to do, I'm going to keep it real simple. All you want to do is find levels, or all you want to do is find areas that you see it hit twice at the least. At the least, you want to see 2 candlesticks, something like this. Look at this. At the very least, you want to see something like this. At least 2 candlesticks touching each other. That's all you want to see, at least 2 of them. You can see that there's actually some good amount of reaction right around this area too. Now I bet if we go back in time, we can see some nice respect to that level. Oh yeah, you could definitely see some nice respect to that level. Look at this, we get rejected. We couldn't go above it and we closed below. On this day, we got some nice support around here, holding these levels real tight. And pretty much that's just how you find these levels. You want to go back in time after you plot them down. You want to go back in time and see how they reacted. So look at that. If you go back more in time too, you can even see that there's some more support right here. Get a little bit of a breakthrough, but we come right back through it and got a lot of support right there. So you just want to go back in time and see what they look like on these time frames. Look at that support right there. Break through it again. Create a little bit of a bear flag, and then we go back above. So that's one example of how you create these levels. There's going to be many of them, guys. Like I said, you're going to have lots. So you can even grab something like this. So this one's a little bit far, but all I'm doing is connecting this one right here, this high right there, with this wick right here, and you can actually see that there's some nice reaction to it. Look at the wick touches right here. We're trying to get above in after hours and pre-market, but we just quite don't get it yet. And look, if I go back to the area, that reason why I marked it off is, look at this wick. We touch that level, get rejected. This day we break above it, and we just don't come back down until this day. And you can just see we get some reaction on it, and then again we break above it, hold it a little bit, boom. So guys, that's a nice area for a level just to have. And look at this day. I didn't even peep this. Look at this day today. We're kind of around that same area, so I'm curious if we'll break above that. That would be a nice resistance level just to have. And this is something I'm showing you guys this so you guys can practice on your guys' own and learn how to do this for you guys self. So if you can really just pull up any chart and look at this. Let's go look at something that I know I don't look at. I know I don't look at SoFi. Oh, I guess I'm capping. I guess that was a long time ago though, because we have not reached these $16 levels. We're barely at $7. So I guess I do. I know I do Nvidia. Come on, let me think of another stock. XLE. I do not do anything with XLE for sure. Okay, look at this. Let's just start over here, guys. Let's just find some type of simple support and resistance. So you can already see with the wick for the candle that closed, and look at all that. Look at all that reaction right there. Look at all that reaction right there. If I go over here in time, you can see that there is always going to be some nice reaction on that level because you're on the higher time frame. So that was in this general area. Let's go over here and look at how it's still gonna hold its level, guys. This is how it works. The higher time frame you're on, the better it's gonna hold its level. It's gonna hold its weight really well. So not only is it, we just created this like right off the bat, and look at, not only is it holding this level, but we get a nice break. A lot of reaction right around here. Look at this support right around here. This resistance turns into a support. And I know I'm kind of going too quick for anybody that's kind of new, but I just want you guys to see that there really is no right or wrong when you create support and resistance levels. You just create a simple, level, and look at this. You can even I'm creating this off the low of this wick, and you can even readjust it and readjust it to create on the high of that wick. But look at this. You can see there's a little bit of, look at this. You cannot make this up. It just happens. There's a lot of support right here, and we break above. Like I said, you can readjust it and make it a lot more easier. And look at, we get the wick touch rejected. Potentially just going to continue back on down. So it's real simple, guys. You don't have to beat yourself up to try to find these levels. And if you do need some extra help, feel free to message me. Like I said, and look at this. I'm going to create this based off just the low of this wick and the highs of these wicks right here, because there's a lot of action going on. And you could make it perfect. I'm not making it perfect for the sake of this video. I want to do it quick. We're already at 12 minutes, and you can see that there's a wick right there touch, and if I go back or forward in time, I'm guaranteeing that there's going to be some nice reaction to it. So we did just instantly break down on this day below that, but you can see some nice support along these areas, trying to hold that level up. And then even around here too, we try to break above, and we actually do break above that nice level. Look how much times we don't get the candle closes above it until this area, and then we got a lot of support right here and we just break above. We almost get it down to below that level and we hold it. So I mean, guys, it's real simple. I promise you. You don't have to beat you guys self up for this. Look at this. If you were to hold, it holds this level well, and we tried to go above, but nah, we just continued on down. Boom, break above, and let's go back. Now let's go back in time. Guarantee I can find some good. Oh, that's as far as I can go. So you can see that I think I created it because of that high and because of the lower wick around here. So guys, based off that, I can just keep these levels here and just have them just to have, so that later on in life, if I want to wait for this stock to reach these specific levels, I can trade them. So how can you even trade these? So how can you trade this? So to go back to this earlier, we're going to actually show an example on these levels that I have charted right here. So we charted this on a higher time frame, right? Like I just showed you guys on higher time frames real quick in a nutshell. This is how to trade those breakouts. So let's go to a 5-minute time frame, a lower time frame. So now I'm on a lower time frame trading what I just charted on a higher time frame because I'm waiting for a reaction. So look at this day. This day, we come up to that resistance level 386.58, and we don't break above it just yet. We don't get no candle closes, meaning no box or square body closes above it, and there's no close. There's a rejection so far. So we come on down, and look at this. Now we're right back at that same resistance level, and it shows a scary candle representing that we're not going above it. But look at this. Buyers are showing up and they're saying, hey guys, we do not want to go one more time back down. We want to take this to new levels. So they ultimately break above. That's how you would trade. You would trade the break off of the break of this level. Look at this candle close right here. This specific candle close is where I would enter my calls, meaning that I would enter positions, option contract signing, saying, I believe this stock's going to go to 388 by tomorrow. Boom. I would probably, knowing me, sell out too dang early. Sell out around here when it goes all the way up to 389. So that's how you want to trade, guys. You want to trade and wait patiently for these stocks to hit your specific levels. And how would you trade the support? So if I'm using my TA, I'm seeing that we're downtrending. And sorry, that was the most ugliest downtrend line in the world. But I'm using my TA. I'm seeing that we're downtrending. We're just ultimately creating lower lows, meaning that each low, we're just going lower. So we're downtrending. You can see right here at this support 380, 378.74. We try to create some support. We got some green candles of getting bought up, hammers getting bought up. But look at this candle close. This candle specifically closes right underneath that one. And that's where you would ultimately want to get in at. You would want to get into some puts, meaning that you take some option contracts saying that, hey, I believe the S&P 500 is going to go to either 377 or 378 or 376 or 375 by whatever day you believe it will go to, or the end of the day. It doesn't matter. Or it does, kind of, depending on your risk management or what your portfolio goal is. So in this case, I would take some puts right on the close of this break. And look at this. We get a nice retest. A retest is really important. It's just showing if this price action to the downside is actually going to continue on. And in this case, we get a nice retest. Buyers tried to go up one more time, but they just couldn't. And they failed. And then we finally get a nice back up to this support that becomes a resistance now. And we finally break above it with this candle. Then this next red candle tries to go back in, but no, we ultimately show that we're ready to go back on up. Try to sell off a little bit and go back up. So guys, that's just how you would trade the quick break of support and resistance. And I hope you guys understand how you guys can find them yourselves. For all my PowerPoint people that want to take notes and write this type of stuff down, I want you guys to keep in mind 4 things. The higher the time frame, the stronger the level is. So the higher the time frame, if you find a resistance level on the daily, weekly, 4 hour, or even the 1 hour, which is also my favorite, I promise you those levels will be really good on lower time frames. Do not try to find really strong levels on 1 minute to 5 minute time frames. You're not going to find the strongest levels there. The more the wicks and candle closes it has on a specific level, the stronger that level is as well. So the more times you see a lot of reaction at that level, the more times you see it close and get rejected or get closed right on it, that's showing a lot of strength. And what do I mean by that is look at this wick right here. It's showing that it closed right on it. Same thing with this wick. We touch right on it. Same thing with this. We close right on it. And so that's just showing a lot of confirmation that this level is really strong. There's a lot of either rejection or we're going to need a lot of buyers to break through it. So resistance levels. So the third thing to keep in mind after those two for finding strong levels, these kind of go hand in hand. The higher the time frame, the stronger it is. The more closes it has, the stronger it is. So resistance can transition to being support after being broken. So I know that can sound a little complicated or kind of just confuse you. And all that means is that, look at this. We rejected so many times that finally it's starting to become a support. So next time we come down here, it's probably just going to look like something like this. Potentially. All I'm saying is a lot of times is after it gets broken, now it turns into a support. Now I could change the name of this resistance and call it support because now we're above it and it's going to act like a support. So that's all that means. So a retesting of a level is really important. That's kind of something that we talked about in the last slide, which was this one. A retesting of a level, which is when the stock breaks below the level that you would take puts at, and it comes up to retest it, just touch it one last time, just to confirm that we are going to continue on down. And it did. So this is a retest. It's really important to wait for. If you're somebody that's like me, that's kind of impatient, I like to just straight up get in right on the close of them and hold my trade plan. If this was to come up and retest and we break back above and then we start breaking some new highs, then I'd be scared. I would actually get out. But in this case, we came up, touched that level one more time, and we continued on down. Came up here, touched that level one more time, broke above it, showing that, okay, they don't want to go back down no more. They don't want to do this. They want to go above. Sellers try to sell it, thinking that we're going to go down, or potentially people that hopped in on here were like, I'm going to get out because I think we're actually going to go down. Look at this. This candle said, nope, I'm going to eat all you guys up, and I'm going to show you guys that we're going to continue on up. Try to get a little bit of a retest, and we continue back on up. So guys, I hope that helps you guys. I hope that helped you guys to understand how to find your guys' own support and resistance levels. And if you guys need help one-on-one, feel free to message me. I'm here to help you guys. I'm here to go over this, and feel free to send me you guys' charts and ask if this is a good support resistance levels. Like I said, guys, there's no right or wrong answer. Do you know, put a lot of support and resistance levels all over your chart, and just delete the ones that are less strong, that are more weak. Thank you guys for tuning in. I'm going to have videos specifically on specific stuff, such as like candlesticks, such as volume, such as understanding what each indicator is. So I'm going to have specific videos on specific things. And this one was specifically support and resistance, guys. So appreciate you guys tuning in. And I hope to catch you guys on the next one, because thank you guys for putting your education first and watching this all the way through.